Alright guys, welcome to this drill-based session. Before we actually move into the drills and the sets of questions, let's first just briefly have a little bit of an overview of exactly what it is we dealt with throughout Unit 2. So to summarize in terms of the tool, the two basic elements of setting up the tool that we are going to utilize throughout this course is number one, obviously the rotation factor. Okay, and within that rotation factor we spoke about two different types of rotations. The first was a bar type rotation, which is predominantly a time-based rotation, and then the second was the point and figure. Now, once we spoke about our rotation, we then moved on to looking at the different types of source footprints we can create, and we had 5 different footprint sources. The first obviously was the delta. The second was the volume. The third was the imbalance source. The fourth was the profile source. And lastly, we spoke about the most important one, which was the bid times ask source. Now, most importantly, guys, as I mentioned, throughout this course and all the examples, we are going to utilize both sets of rotations for different strategies. In terms of the source, we are predominantly going to focus on the bid times by ask, as well as develop a specific strategy utilizing the imbalance. Now, just to note, the reason we don't utilize the delta, volume, and profile is very simply because you can get all of that information within the bid times by ask source. Okay, so that's what we dealt with in Unit 2. So you should now have your chart set up. Everything should look relatively easy to utilize. You should be able to move between the different markets quite easily. Last but not least, I really want to ensure that you can not just utilize the tool, but also that you understand the intricacy behind the tool, and that's what this drill is all about. It's going to test that you actually understand what it is you're exactly seeing in that footprint tool. Okay, so obviously if this is simple, it should be simple. If it is simple, great. That means you understand the basics of the tool. That's fine, brilliant. Move on to Unit 3. If, however, you're still struggling a little bit trying to understand the tool, then this will be a perfect drill session. So straight into it. Question number 1. Or as you can see on the left side here, I've got a hypothetical footprint. So this is our footprint on the left, and on the right side we've got the prices. Now, I want you to answer the following question. So question number 1. What is the volume traded at each price? So tell me, what is the total volume traded at each price? Question number 2. What is the delta traded at each price? Is it positive or negative? Question number 3. Which color should each price be? So if you were to color in each one of these prices, 40, 41, 40, 41, 42, 43, what color would it be, red or blue? Question number 4. Which shade should each price be? Now remember, we spoke about the number of shades and how that is the relative amount of volume traded at each price. So go and put each one of those prices in either a light shade, a medium shade, or a dark shade. Now just again, to cast your memory back, is that there's only 2 colors that it can be, that's red and blue. And from each one of those colors, you're going to have a light, a medium, and a dark shade. Okay, question number 5. What is the cumulative delta over these 6 prices? And question number 6. Identify the imbalances between prices. Okay, I'm going to give you a little tip there. It's diagonal in nature. So again, if you don't get this, that's okay. I will do a guided tuition session with you after this. And your bonus question, and I don't know if I've mentioned this, but if you do get this right, congratulations. But what does the 0 represent at price 42? So what does that 0 represent at price 42? Pause this video now, take a moment, go through those questions, think about it, and when you come back and you start playing again, I'm going to go through each answer individually. Right guys, so back into it now. Let's move straight on to the answers. I hope you found that useful. The first thing is, what is the volume traded at each price? So very simply, as we spoke about, the total volume is simply what was traded or what was sold at price 45 versus what was bought at price 45. And we can see the sum total of volume is none other than 1,100 contracts. In the second example, we can see it's very simply 710 contracts. We then have 367 contracts, then 650, then 1,030, and lastly 1,350. Okay, nice and straightforward. Hopefully you got that right. Now the next thing is, what is the delta at each price? So to get the delta, you simply subtract the two from each other. So 300 in the first example, except you now need to add either a positive or a negative delta. So remember, the delta is merely the interaction or who won the battle at that price. So in the first example, we can see there was more buying at 45 than there was selling. Therefore, it will be a positive 300 delta. And likewise for the next, the buyers won this price again, and it was positive 190 delta. We then have minus 145 delta as the sellers won price 43. We then have positive 650 delta, positive 870 delta, and last but not least, negative 650 delta. Okay, so straight away you can see obviously that the delta varies at each price. Now, the next step was, which color should each price be, either red or blue? Now, the color just simply shows us whether it was buyers who won at that price or sellers who won at that price. So when the color is red, obviously the sellers won, and when the color is blue, the buyers won. Okay, and by one we mean there was a positive impact on the delta. Okay, so very clearly, very easily, we got a blue, a red, a blue, and a red. Okay, and then the next question is, what should each shade be at each price? Now, this, okay, again, if you found this a little bit tricky, that's okay. Important thing to understand is that the shades are based on the relative amount of volume. Okay, so an algorithm is designed effectively to go and add a shade based on the relative volume. So it's one price's volume relative to the next. The price that has the darkest color will ultimately have the most amount of volume versus the lighter. So if I was to draw this on a scale, it's simply just the least amount of volume toward the most amount of volume. So the darker the shade, the higher the volume at the price, and obviously counter, the lower the volume, the lighter the price. Okay, so again, if we were to put this into a shade, it's very simple. We can see the volume traded, the total volume, and we can simply see that the highest volume is 1,350. Therefore, that will be a very dark shade. We can also see that, relatively speaking, 1,100 is a relatively dark shade. On the flip side, we can see that 367 is a relatively low volume relative to all the other prices, therefore it will get a light shade. In between, we have got obviously a medium shade with 650 and 710, and obviously then 1,030 we could pretty much interpret as a dark shade as well. So that's how you would see the shades. It's based on the total of volume. Note obviously, the higher the amount of volume traded at a price, obviously the darker the shade, and likewise the lighter will be allocated to the lower relative volume. Alright then, what is the cumulative delta? So very simple. To get the cumulative delta, you just go and add up all of these prices together, and you will find out over this series of 6 prices within this rotation, we can very clearly see that the buyers have won this rotation and they've had a net impact or a net positive impact on the market in this rotation. Alright, then lastly, identify the imbalances between prices. Now, again, don't worry too much about this. We will spend quite a bit of time on this when we move on to imbalance strategy. But very simply, we can see there are some imbalances, and this is definitely one of them. Now remember, imbalances always go in that direction, not in the opposite direction. And the imbalance is none other than when there's a really big relative difference between buyers buying a price versus sellers selling a price. So we can see buyers bought 650 at 42, versus sellers selling only 80 at 41. As a result, there's a really big imbalance between how much was sold at the best price, at the best bid, versus how much was bought at the best offer. Okay, and obviously an imbalance, obviously, one man's imbalance might be another man's, non-imbalance. So it's important, and we will talk about this later on, to distinguish how much is an imbalance. But as a basic rule of thumb, I like to work on, numbers, anything 5 times, okay, so 5x, anything that's 5 times, for me, would be considered an imbalance. So straight away we can see no imbalance there, an imbalance there, potential imbalance there, no imbalance, and no imbalance. So if you got the answer right, that was the imbalance, congratulations. Okay, then to answer the bonus question, very simply, what does the 0 represent at price 42? It's very simple, guys. And again, don't stress too much about this. I don't think I went over it with you guys just yet. But a 0 represents a little bit of stops. Okay, so you all know what stops are. You know what they look like. You get annoyed when you get stopped out. But when there's a 0, effectively what it's telling us is that as the market began to move either up or down, it skipped completely over this price. In other words, there was no single selling going into the 42s at any point. Okay, so what it's saying is that once the market started to go back up the page, obviously the buyers were so aggressive, so intentional to get bought that ultimately they very quickly skipped over this price, that sellers were not able to even sell a single contract at price 42. All right, guys. Thank you for joining for this drill-based session. I hope you've got a much better understanding now of the basic elements of the footprint. Again, we're going to move into Unit 3 now. We're going to start talking about very specific principles on the footprint. And again, once we do that, you're going to start to recognize how powerful the footprint tool is. Good luck, and I'll see you again in Unit 3.
Welcome guys, this is Unit 2. This is going to be all about setting up your own footprint charts using the free Market Delta 30-day trial. So before we get started, I'm going to just, kind of give you a little bit of an objective as we go through this unit. Make sure you keep it very simple. Okay, you're going to hear me say that a lot over the next half hour. Just make sure as you setting up your charts, choosing the different colors, keep it very simple. And I will guide you along, give you little hints, give you little, bits things you can think about. But ultimately, just remember, the charts need to be simple so that we can extract information in a meaningful way. That is the purpose ultimately of charts. It's to allow us to take information from the market and make decisive decisions. So, straight into it. Step number 1, follow the link. Now, you would have been provided with this link once you signed up for the course. This will ultimately take you to the following web page. So it's very simple. Obviously, it's a 30-day trial request, and you simply just go fill in your details and ultimately submit. Now, once you've submitted, you will receive an email firstly from Market Delta. Now note, obviously Market Delta is a US-based company, so sometimes this can take a couple of hours. Obviously, if you do this in the US session, if you're in Europe, then it's likely to you're likely to get a response a lot quicker. So, the email will look a little bit something like this. Hello, Mr. X. This is what the trial includes. So just a few things. Obviously, in terms of data, you will get data for the CME, CBOT, NYMEX, COMEX, ICE, SGX, and ASX. So, just briefly, if that sounds very confusing, CME will have most of your currencies, as well as your mini S&P. Your CBOT will have obviously your US bonds. Your NYMEX will be your oil, your COMEX, your gold, your ICE, also your Brent, as well as your ASX, some of your Australian products. Then note, obviously, you will have the footprints, which is the integrated footprints, which is Market Delta's main product, as well as a whole bunch of other different things that you can look at and play with. What is quite fun, obviously, you've also got a demo trading account. I will show you very briefly in this tutorial how to set up a ladder. But again, guys, remember, this entire course is about teaching you to ultimately, utilize the tool in an effective manner. So let's get straight into it now, and once you've got that done, you will then receive a second email, and this will be from CQG, and this will be saying to you effectively your login credentials. Okay, so you're going to simply follow the download URL, and you then, once you've downloaded everything, you've installed everything, you're then going to fill in your username and password, and that will take you into the software. So let's go and have a look now what that software will look like. So this is pretty much what you're going to see once you've downloaded the software. Blank screen, and what I'm going to do is I'm going to start you off with the basics. I'm going to take you through the most important things you need to know to get the tool set up, to start utilizing the tool, and then later on when we get to Unit 4, we're then going to start developing some of the more, so the more nuanced ways of utilizing the various charts. So we're going to start off in top left in the System tab. We're going to click on that. Now, what CQG is brilliant for, and I'll tell you 100% they're fantastic, is when it comes to both their contact customer support feature as well as their live chat. Now, if there is any question you're unsure about, do ask them in the live chat. They're incredibly quick to respond. Remember, obviously, CQG is based in Europe, so they will respond in both European time as well as, obviously, the US session. Okay, so with that in mind, do utilize that live chat function and ask them any kind of questions you might have. Now, obviously just scrolling a little bit further down, some of the other things you want to pay attention to is obviously your system preferences. So again, this is very important, particularly when we start to get time changes with the European and US sessions. But again, there are a set of defaults here that you wouldn't need to do a great deal with. Okay. However, if you did want to choose various time zones depending on where you are, that's where you would click, as well as potential settlement times, as well as potential display. So this is kind of like the overall view of the product. As you can see, the background we've got right now is gray, so there's not a great deal you would need to do under the Preferences tab. Then what is quite important is this little feature here called the import-export pages and components. Now, very simply, if you had a very nice friend who was willing to give you his templates, ultimately what you would do is you would then go and save his templates by exporting them from his CQG software. You would then go and put it on a flash disk and import it into your own software. So it's just a way that you can share templates, share charts, share all sorts of things, and easily get them from one computer to the next. So that's where you do all your importing and exporting of various templates. Other than that, if you just wanted to exit the MarketDelta desktop, when you do click exit, we're not going to do it now, it will prompt you to save, and that brings me to the next and one of the most crucial things you must do from the beginning. Click on the Auto Backup User Setups and make sure that you have got it set to backup automatically. So do not disable this Auto Backup because what happens is if you do and you forget to save your charts, then you'll come back in and ultimately lose your charts. So just make sure you have got that disabled and make sure once you've done all your charts, make sure you save as well as do a backup before you exit MarketDelta. Okay, just with that in mind, you're going to hear me use the word CQG and MarketDelta, quite a lot. Don't stress; they are no different. Effectively, MarketDelta used to be a standalone product, and they had such wonderful features and a really good tool that ultimately CQG integrated them into the CQG offering. So effectively, you are utilizing a market profile product, which is kind of in tandem with CQG. Alright, now once you have started to set up everything, just do bear in mind if we come a little bit, I'm skipping the page, but if you do want to save things here, you can see also in the middle of the page you have got the save function. Okay, note, you can obviously, with the product, you can have 4 different screens. So we could ultimately have 4 of these screens, which is fantastic as a trader because that means that we can set up charts on 4 different screens. Okay, so we got a lot of space for charting, which is definitely fantastic and useful when you are trading multiple products. Okay, then let's move on to the second tab page. Now, Again, there's a number of ways you can save a page as mentioned, and this is where you can do it as well. So you can come here and save the page. Note, obviously, if you want to create a new page, in other words, like I said, you've got 4 different pages or 4 different screens, that is where you'd create a second, a third, and a fourth. Then do bear in mind, obviously, again, you can see that you can come onto the preferences of the page. If you want to, specific preferences to that page. You can also import and export components into this specific page. Okay, let's now move on to the third tab, the setup. All right, again, this is very similar to the system setup. So if we click on it, we can see that obviously we've got email settings, we've got the display settings, the time settings. So again, very similar to what we had, or exactly the same as what we had under the systems tab. Then if we go to print, again, very good for if you want to print off your charts for your debrief. For me personally, I don't use this feature. I just tend to go to the snipping tool. If you're not sure what a snipping tool is, just go to your start button and type in snipping, and you will see that very quickly there will be a snipping tool. It's very simply, it's a drag and drop type feature where you can very quickly snap pictures, snap charts, snap all sorts of strategies and post them into your debrief. Okay, obviously if you don't want to use that, if you do want to print off charts, a lot of our traders do print off. They print off the individual charts and then annotate them on the page. That is where you do it. You simply click on the print, go to the print preview, make sure it is exactly what you want, and ultimately print. Okay, then into the next tab, window. Now this is quite an important window. We do have a lot of options within this window, so I'm going to show you a few of those options that you can play around with. So if you come onto this drop down, you will see a whole host of new windows you can create. Now, I'm going to go through them very briefly, but I'm going to show you the ones that will come in handy as you go along with regards to this course. So the first is the alert function. Okay, very, very good, particularly as you're developing your strategies. You will want to know when price gets to a certain point. Okay, so you're simply going to come onto the alert, click on a condition alert if it's a specific condition. If it's time alert, you can click there, and again, you can, it depends on what the alert is, you can choose what type of alert you want to set up. Okay, once the market meets that alert conditions, it will then give you a message. So a message will pop up on your page and will say the oil market has gone below this certain price, and you can then quickly navigate and make sure you do not miss out on a potential strategy. Okay, in terms of opening charts, we will get to this feature in a minute, but if you did want to come and open a chart, this is where you'll do it. You simply go onto the chart and notice we've got all the different kinds of charts you can think of. Okay, from obviously bar charts, candlesticks, a line, market profile, point and figure, all the charts you can think of. For this course, I'm only going to show you the footprint and the candlestick chart. I'll show you the tools you want to utilize with it. But again, guys, that's not the only chart you will get available to you in this footprint chart, but just do bear in mind, keep it simple. Okay, so let's now move on and have a look at some of the other kind of windows you can find. The DOM Trader is very, very interesting, and again, I will set this up with you in a minute. That will allow you to trade on a sim with some fake money and have some fun. But again, don't get distracted. Remember, this is a footprint course. Right. You can then go and look at and set up an option, so you can look at options pricing or premium. You can then have a look at all sorts of other things. You can obviously transfer data to an Excel sheet. You can look at news. You can have all sorts of monitors. Again, it's all there for you to utilize, play around with, and set up. Okay, lastly then, the info tab. If you do again want any help, that's where you would come, live chat and customer support, and then this little important feature here, which is find a symbol. Now, this is very simple. Okay, you want to, on the left, go to the exchange. Remember, all of the products you'll be utilizing will be either on the CME or on the NYMEX or on the COMEX. Okay, so if we want to find the gold, we simply type in COMEX, we push enter, and that will take us to the exchange. We simply click on it. Once we've got that, we can obviously scroll down and we can see the gold here, and the code is GCE. Okay. Now, again, obviously, you'll find all the different codes for the products you're going to utilize, but for you guys, I've got the codes we're going to utilize throughout this course. So take a picture of this now. For the Euro-Dollar FX, it's EU6. For the GBP USD or sterling, it's BP6. For gold, it's GCE. For the E-mini S&P 500, it's EP. And for the WTI oil, it's CLE. Now remember, all of the examples I use, all the drills I show you guys, will be based on these 5 products only. The reason we've used these 5 products, obviously, is they're very liquid. Obviously, most futures traders will trade one of these 5 products, so it's a good way for us to show you the tool, show you how the tool is quite effective, and obviously show you the strategies that can be utilized within these 5 markets. Okay. So that's our 5 tabs and our basic functionality. Now that we've got that, again, I'm not going to go through any of these tabs here. Again, if you want to find symbols, you can click on it there. If you want to set up any kind of formula, you can click on it there, as well as obviously save and navigate between your 4 pages. Alright, now let's go back to this window and let's move on and create ourselves a chart. So we're going to come onto the new window and we're going to click on the chart and we're going to get ourselves a simple candlestick chart. Now note, obviously, the market defaults to a white background. Now I would suggest to not play with this too much. Again, you're entitled to, if you really want to make your background black and play around with the colors, that's great. But just keep in mind, time is precious. Utilize your time to understanding the tool and developing the strategies rather than getting a cool funky background. Okay, keep it simple. Now, the important thing to understand is that you can, I'm going to go through this chart from top to left, top to bottom and left to right. And the first thing to point at is this little green logo in the background. Now, if you left click on that, you will see that you can ultimately replicate charts. You can also take the chart that you're currently seeing, take it out of the current page and put it into one of the other 3 pages that you have. Okay, now where this is useful is, and this is a major suggestion or a tip I'm going to give you, in the beginning, before you create 4 different pages, make sure you're happy with one separate page. So make all the adjustments, all the preference choices, all the different things on one chart, and then go and replicate that chart and put it in your other pages. Okay, and you would simply do this by replicating. You see a second chart comes up. You then go and click on window out of the page. And you can see it suddenly goes red, and you're then able to drag it and drop it into one of the other 3 pages. Okay, other than that, obviously, we can see that you can obviously add to, you can do all sorts of other things. You can link Windows mode, you can create an image of this, again for easy cropping, but let's keep it simple. Alright, once we've done that, this toolbar here at the top, that is where we're going to click next. Now, in this instance, we're going to right click. Now, by right clicking, we can take this chart and we can very quickly turn it into any one of the other types of charts. So we can turn it into a line chart, we can turn it into a tick chart, we can do any number of things with this chart simply by right clicking on the bar above. Okay, in terms of what else we can do, obviously, we definitely want to be able to change chart interval. So this is where you do it. Right click on the top bar, come down to the chart interval, and you can select any type of chart interval. Alright, in terms of then further on this, in terms of continuation settings, obviously futures markets do roll, so I would highly recommend that you always have it on continuation settings. And as you'll see now, if I go right click on it, the continuation settings has now got a tick. Okay, other than that, obviously, you can then go into the preferences of this individual chart. So bear in mind, in the beginning, when we came up to system, that was the overall system preferences, like the default preference. If you then wanted to create specific preferences for each chart, you would simply right click and go down to open preferences. Right, let's now move on to the price side. Again, if you want to make the chart smaller, you simply hold in the left click whilst over the price, and you can scroll down and you can scroll up and down and up. Okay. In terms of units and auto scaling, you just right click and you can auto scale and make sure that you can see the whole chart, regardless of how small you make it on a page. Then if we come to the bottom where the time is allocated again, if we right click here, and this is a wonderful feature that not many people know. If you want to very quickly go and look at a date back in the past, so you want to do a little bit of back testing, you want to go see, how did the euro respond over an ECB meeting, you can simply click on the date and go and select the date of the previous ECB meeting and see how the market traded. Okay, other than that, obviously, you can also play around with some of the other features, but the most important thing is the go-to date within the time. If we come to the bottom left here now, you can see a little box there. You can see it's kind of waiting for me to type something. This is where you will see when you start typing in to change the markets, this is where it will appear. So let's do that now. Let's change this market from the E-mini S&Ps to the sterling pound. Now, the code is BP6, so I'm simply going to type BP and 6. And you can see now the number and the code comes up. I'm then going to push enter, and the market simply changes to the pound sterling. We can then change to the gold, which is GCE, and again the market simply changes and adjusts to the gold. Okay, now what I want to move on and talk about, obviously if you don't like this box here in the bottom left or the box in the top left, it's simply just an info box. You can right click it and you can hide it. Okay, other than that, I'm going to show you now how to create separate tabs for each market. So obviously in the beginning I said to you, you can have 4 different screens with all your charts, or you can create one chart on one page and very quickly navigate between markets. So that's what we're going to do now. I'm going to show you how to duplicate and navigate between markets. So let's say you really like the 60-minute chart and you've done all your default settings, you've made it look pretty, and you really like how it looks. We can see up here we've got a tab called GCE 60C. The GCE is the code, the 60 is the time frame, and the C just means continuation. Now, if you want to go and duplicate this chart, you can very simply just click on this plus with the left click, and you will see suddenly you have got 2 GCEs. Now, if you want to just get a different market, like the pound sterling, we simply just type BP6, enter, and now we can very quickly flick between 60-minute charts for the gold and for the sterling market. We can do that for the euro, so we're going to go EU6. Now we have euro, we can do it for the mini S&P, which is EP, and last but not least, we can do it for the oil, which is CLE. Okay, and there you have it, guys. Now, I would suggest, as you go through the examples later on the strategies, you will see that I've set it up this way so you can very quickly navigate between the titles. If you're not sure of the codes and you want to create your own title, simply right-click on the box, rename it, and call it gold. Do bear in mind you need to push enter before then continuing. Okay, and you can go and do that and name it for certain things. Now, that's pretty much how you would set up your candlesticks. Now, just some of the more sort of nuanced features with regards to candlesticks, if you want to go and change how it looks or ultimately add studies, you can simply right-click anywhere on the chart, add a study. Now, obviously, we've got our usual cursors and our pointer tools, being our Fibonacci's and trend lines and pitchforks and all these sorts of wonderful things. For me, again, remember, keep it simple. The only thing I would like is this fantastic tool, which is what we call a profile tool. Now, a profile tool is simply where you can overlay the profile or the market profile within the current market context. Now, again, a lot of the traders do use this, and I will show you this again later on in the footprint tool. Okay, obviously, as you can see, before I move on, as I scroll left, the market, or it's auto-scaling itself, so it's always fitting within the screen. And you can also see this little arrow in the bottom right. So this arrow is simply if you want to quickly get back to the current price and the current market candlesticks, you simply click on it and it takes you straight back. Now, let's look at some of the other studies you can add. So let's say, if we want to delete something as well, we can simply click on it and we can modify. Okay, so we can modify, change colors, or we can actually remove it. Now, let's add a basic study that you can get the feel for it. So for me, volume is particularly important, so I'm going to add that on. I'm then going to go add another study, and I'm going to call it the moving average. And we've now got 2 studies. And last but not least, let's add one more study called the average true range. Okay, so now you can see very quickly we've got 3 studies, the candlesticks and the 60-minute chart. Now, so important is to be able to modify these studies. To do that, simply click or right-click on the study you want to modify. So if it's the moving average, we simply right-click on it. We modify the moving average, and when the screen pops up, we can do all sorts of wonderful things. For one, we can change the period. It's currently 21 days. Let's change it to 20. The type of moving average we can change from simple, smooth, exponential, weighted, whatever we like. In terms of the color, we can simply change it here and maybe make it not green, maybe make it pink. Okay, so that's how you would modify, your tool. Again, you can do the same thing. Obviously, for the volume, you can modify it, or you can modify the average true range. So that's how you would set up your basic candlestick chart. Now, I'm going to just scroll it. Obviously, notice what I just did there. I can make this as small as I like. I can make it as large as I like. Ultimately, for this course, I'm just simply going to have 2 charts. One will be a candlestick, and one will be a footprint chart. So let's now go and create the footprint chart. So again, we come up to Window. Again, we go to New Window, and this time we're going to select a footprint chart. So we go to Charts, and we come down to the footprint. There we go, at the bottom. Okay. So what you can see now, again, note, obviously, the charting platform gives you a default setting for the footprint. So the first thing again to notice, obviously I'm just going to go through this very quickly from top left to top right. Again, notice everything looks the same. We've got our function here to replicate out a page. We can right click at the top to choose different charts, intervals, as well as continuation settings and preferences. We can obviously hold in the left click and make it larger and smaller. We can also right click to auto scale. And then at the bottom we've got time, where we can go to date, as well as obviously some other features. Okay, now this is quite important, and I'm going to show you the basic elements of the footprint. We're not going to go into a great deal of detail of what each element is. I just want to get you to set it up nicely now, so that when we get later on to Unit 2s and 3s, you're quite comfortable with utilizing the tool, navigating around the tool, and you know your way around the basic elements of the tool. So, once you've got the footprint up, okay, again note, if we want to adjust or change the type of footprint, we simply right click on the footprint, and we go and modify footprint. Now, this is quite an important tool. You're going to see me spend a lot of time with this later on in Unit 4. I'm going to go through each one of these in very specific detail, and the reason is simple. Okay, every one of these, every one of these choices you have, right, will ultimately represent the information in a different way. Now, be warned, and this is a very, very important lesson to learn. You don't want to play or constantly be playing with your charts, okay? The whole purpose of a chart is to be able to represent data in a very meaningful way. Now, one of the mistakes a lot of young traders make is they're constantly either adding tools, so maybe one strategy is not working, so they suddenly add Bollinger Bands and moving averages and relative strength indexes, okay? You cannot begin to develop consistency and pattern recognition if you're constantly adjusting the tool, okay? Because you're not measuring every day. You're not measuring apples with apples. All right? So what I mean by that is, if you look at the same chart format every day over a period of time, you're going to start to develop or view certain patterns that keep cropping up. Okay, so just factor that in. Once you've got the setup very basically, I'm going to show you 2 different types of ways to utilize the footprint in terms of these basic characteristics. But I will also show you other ways you can utilize it, for later on whilst you're developing your own footprint strategies. Okay. So the first thing to come to is the source on the left. Now, the source, and we're only going to utilize 2 source types. One is simply a bar. Now, all the source type is it's saying what sort of a footprint do you want. And the 2 types we're going to use is, one is a bar, that's just a traditional bar chart, and the second will be a point and figure. Now I'm going to show you the difference so you can see what they look like. I'm just going to apply this and move out of the way. And what you can see if I go between the 2 is that the bar ultimately is almost like a candlestick. And with the bar, I can set various time frames. So let me show you what that looks like. So let's right click on here again, we go modify, and we choose the source and we say bar. Now, if we say OK to that, we can see currently in the top here, we can see that it's set to 60-minute bars. So right now, the footprint has a setting of 60-minute bars. So every 60 minutes, we will get a new footprint line. Obviously, because it's set to that, I have got a chart time frame that I can set this with. Now, again, you can go set up a 1-minute footprint, or you can set up a daily footprint. Now, this is very, very handy, particularly when you want to see, for instance, what the positioning is day to day. Alright, so if you want to quickly see what the delta is from day to day, you can simply use a day-to-day market profile delta. So obviously the second one we want to look at then is the info source, the source, and that'll be the point and figure. Now, the point and figure simply works on rotations. Now, what that means is that whenever the market rotates a certain number of ticks in one direction and then reverses a certain number of ticks, it will only then show you the new line or the new footprint. So let's take a basic example. So right now, the point and figure, the reversal set to 3, I'm going to make this 10, and what you'll see is that ultimately every time the market moves 10 ticks up, you'll get a rotation. So you can see we have a very large rotation. The first 10 tick pullback gives us a new rotation. Okay, and that's all a point and figure is. For a large part of this course, we are going to use rotations. Reason being is that they show auctioning very, very well. Equally, we are going to use the bar charts. We're going to show time-based auctions because they're a lot better for relative shifts and relative changes. So we will use them both. You will get a lot of practice at this. For now, what I suggest is let's go and create 2 of them so you're ready for the footprint course. So as you can see right now, we've got it on rotation, we've got it on oil. Let's go and rename this. Let's call it oil, and let's call it R for rotation. We then want to create a second footprint, but this time we're going to create a 5-minute bar chart. So, like with the candlestick, we simply left click on the plus, we then go and right click on the footprint, we modify the footprint, and we go to the source where we change it from point and figure to the bar. Okay, we simply select that, we right click on the top bar, go to the chart interval, and select a 5-minute time frame. So now you can see if we go and rename this as well, let's just call this oil and we call it 5min. So straight away now we can very quickly flick between an oil rotation as well as an oil 5-minute chart. Okay, so that's the basic difference between the 2 sources. Now, let's go and have a look at the different types of footprint styles you can get. And this is quite crucial because we will be utilizing quite a few of these throughout Unit 4. So, again, we right-click on the footprint, we come to the study parameters, we then go and drop down on this style. And you can see there's 5 different styles of footprint you can select. Now, the first is what we currently have, which is the delta. Now, the delta is just very simply the net interaction between buyers and sellers at a price. So what do we mean by that? Again, don't get too concerned about this. You're going to hear me talk about a lot about this later on in the course. But very simply, if we look at the current chart here, we can see that the price is currently trading 57.46, and at the moment the buyers at that price of 46 have lifted 41 more contracts than the sellers have sold at that price 46, and that's why it's represented as green. So in other words, the net interaction is that there's more buying by 58 contracts than there is selling at price point 46. Okay, and obviously that's constantly updating as the market's moving. It's constantly summarizing the picture occurring at that price point 46. So that's just the delta, guys. That's just the net interaction between the buyer and seller at each price. So if we were to select a different style, we could select, for instance, the bid and ask. Now in this instance, we're not getting the net interaction between buyers and sellers. We are actually getting the exact interaction. So we're getting the total interaction that's occurring. And I want to go through this quickly and make it a little bit larger so we can have a look in. Okay, so we can see again the market's obviously now got 2 numbers here with an X in between. All this simply means is that, again, if we look at price point 46, on this price point the buyers have lifted the offer for 81 contracts, but there's been no selling at price point 46. Okay, so if we go one low, we can see at price point 45, we can see the buyers have bought 313 contracts and the sellers have sold 331 contracts. Alright, so all we're seeing in this instance now is we're not seeing the net interaction between buyers and sellers, we're seeing the individual interaction between buyers and sellers. Okay, let's right click on it again, let's go modify the footprint, and this time let's go and select the volume as our source. Now very simply, this is a straightforward one, it just accumulates the total volume at each price and represents it on a chart. We will not use this style throughout the course, not because it doesn't necessarily have value, but because I haven't ever utilized it. But you can definitely develop strategies. But just remember what I said. Whatever tool you choose or whatever format you choose, just make sure you're consistent in that approach. Stick by it. Alright, another style we can use obviously is if we go to Profile. And if we apply that, this now we can simply see that the market just gives us a profile in terms of volume. So we've got a volume profile now instead of just the volume in numbers. Again, some traders do utilize this. It's very good for seeing shape, but again, we do have the profiles for that as a separate tool, so we don't actually use this, and we will not use this in the course. But it is again a style that you could potentially look at to develop strategy. And then lastly, the imbalance. This is something we will again look at, and all the imbalance does now is it's exactly the same as the bid and ask. As you can see, it looks exactly the same, except in this instance you can set the market to show you where imbalances occur. Now I'm going to keep it very simple explaining this. We will utilize this a little bit further in Unit 4, but an imbalance is simply created when there's more buying versus selling at a certain price. Okay, so it's a relative shift. So for example, if we go up and we have a look at this little rotation here, we can see that as the market is selling off, we can see that at this price point between 50 and 49, sellers sold 139 versus buying 53 at the price above. So this is showing you where there's an imbalance between the best bid and the best offer, and it's showing you effectively, the intentional aggression from either buyers or sellers. Now, an imbalance is created when it crosses a certain threshold, and we will talk a lot more about this later on. For now, just understand that when there's a big variance between, the interaction between sellers and buyers, between two prices, it creates various imbalances. And we can see that imbalance continues as buyers only bought 66 at 49s, but the sellers sold 428 at 48s. And again, we can see the buyers only bought 423 at 48s, but the sellers sold 1,263. Okay, so we will talk about that a little bit later on. It is a strategy we're going to develop ultimately, and I'm not going to give too much away, but when you do get these imbalances, we do tend to see that initiative or that imbalance continue in that direction. And that's what you can see in this example. We can see how the oil created this imbalance between 47s and 49s, and ultimately prices continued lower all the way down to 41s. Okay, so those are the 5 different sources you can use. We are only going to utilize 3 of them throughout this course, and they are the delta, the bid-ask, and the imbalance. Okay, obviously the rest of this I will go through in Unit 4, so don't panic too much. I'll show you where the threshold and imbalance come in. I'll show you the different elements of the min difference, etc., etc. But for now, let's keep it simple. Let's get used to utilizing the basic elements of this tool. The last thing you can do obviously is the display. So this is where you'll select how strong or weak you want your colors. I do like bright colors, so this is where I would select it. You can also select the size and the width of the certain things you would like, and again, that's for you to play with. One of the things I do really like is I like to have a candlestick alongside my footprint chart. So you simply click on the none here, go click the size you want it to be, and select the colors you would like, and you will see that all of a sudden when I push OK, I can see the candlestick trading alongside the footprint. Okay, that candlestick works like a normal candlestick. We opened here, we closed here, the next candle opened on the low and closed here. Okay, so that's the basic elements of setting up your footprint chart. Now, to keep it simple, modify your footprint, keep it on a basic bid and ask. Most of the examples I show you and most of the strategy sessions, we are going to utilize the bid and ask. Why? Well, it's very simple. The bid and ask incorporates most of the kind of information you need to see on the footprint. Okay, so we're going to click apply and we're going to push OK. Now again, just like the candlesticks, you can add various features and tools and studies, and I'm going to show you the two most important studies or three most important studies you want to add to your footprint. And to do that again, we're going to right click and we're going to go and add study. And once we've done that, we're simply going to type firstly the weighted moving average. So the VWAP is quite a very prominent strategy. A lot of the traders do keep it on. It does sometimes allow some really good opportunities. So we're going to add that VWAP to the studies. We're also going to go right click, add another study. This time we're going to type in market profile. Again, quite a nice study to have. Let's type in MA. Okay. So if we type in market profile. Okay, we'll find this in a minute. Let's also get up a, and this is probably the most crucial one, let's get up a FPBS, and this is simply a footprint bar statistic. So this is a summary, and it's probably the most important statistics you can get with the footprint tool. Okay, so I'm going to go through these individually. Obviously at the top we've got the volume. That's simply the total volume within this bar. We then have the delta. That's the net interaction that's occurring in this bar. We then have the delta on the day. So that's the cumulative delta, the cumulative interaction of the entire course of the session that is occurring. We then have buy volume and sell volume. That's simply the total buy volume in this bar versus the total sell volume in this bar. You will note straight away that the difference between the buy volume and the sell volume is none other than the delta. You can also then see the maximum the delta was in this bar, as well as the minimum the delta was in this bar, as well as obviously the delta change, which is simply just the delta from the previous bar to the current bar. Now, so important, again, you don't want too much information, so I'm going to suggest you right click on it, go and modify it, and let's remove some of these from the actual chart. So for me, the only ones you really want are the top three, so simply unclick and apply. Okay, so again, the reason we remove all of that is because within these three statistics you actually have got all the other information included. Alright, now before we then move on, I just want to show you how to obviously utilize the basic clicks as well as color lines and the importance of color lines. So it's quite simple to get a line, just a basic horizontal line. We simply left click on the price and we can move up and down. When you're ready to place it, we left click again. If we want a vertical bar, we click on the time, left click, we can move it to where we want, and we simply click on it again. Now, so important, I talk about this a lot, choose the right color. Okay, so color lines are very, very important. I'll tell you why. Alright, and you'll see as I go through the footprint course, I'm going to talk about various colors and how to utilize them. So don't be alarmed, you don't have to remember this too much. I will tell you what certain colors mean. But for me, I like to use, for instance, dark blue to show where there's a potential for an unwind of the delta. So take for example, yeah, we can see obviously the delta is quite negative in this oil market, negative 8,000. Let's say for all intents and purposes, I thought that once we get below this, once we get above this 56 to the upside, the shorts will get out, that delta will begin to unwind, and the aggressive nature of the sellers, they'll start to take profits. Now, for me, I like to color it dark blue. So you simply right click on the price, you modify the horizontal line, and you come and select a different color. And we can see the moment I choose the dark blue, it tends to stand out. Now, the reason I do this is because, let's say for, I'm focusing on a number of markets and I've been waiting for this key level in oil. In my preparation, I can put all sorts of colorful lines in the market so that when the market gets there, I don't have to think, oh, okay, what was these 56s? Okay, I know it's obviously an area I was focusing on, an area of potential stops, because blue equals stops. And that's the purpose for color lines, but again, don't worry too much. I will show you all the color lines I use, why I use them, and ultimately, hopefully, you can adopt this habit into your trading. Okay, obviously with regards to just basic trend lines and all that for the candlestick chart, like I said, again you can just right click and you can go and add a pointer tool. You can then simply just select something like a trend line, and you can there's a trend line, and you can simply just draw any kind of trend lines you want. And remember guys, it's a very functional tool, so you can simply right click, you can remove the trend, you can set the trend color, you can do any kinds of thing you want. You can add the price alert, so that when it gets below a certain price or a certain point, you can tell the market to give you, or tell the software to give you various alerts. Okay guys, that's pretty much the basic elements of how you set up this tool. Now, where I want to wrap up this unit is I just want to ensure that, again, we come back to that concept of setting up your tool. Make sure that you've got your candlestick on the left, make sure you've got your footprint on the right, make sure you also have all your markets selected. Okay, this will just make it easier for you to navigate as we go through the various strategies. So take the time, get your tool like you like it. Again, don't if you like the way I just set it up, that's fine. Keep it very simple. Keep all the noise off of your charts ultimately, because that will aid you in developing effective strategies, but also more importantly assist you in making effective decisions. Okay, if there are any questions and there's anything you're a little bit uncertain about, don't forget, you've got the live chat here. You simply left click on it, and the moment you start typing, a customer service representative will be with you shortly. So you can ask them any questions you want. What I would say is, don't utilize this tool just yet. Play with it yourself. It's so important. I think the mistake we all make is we always want to be taught how to do something, but believe me, the best way to learn this tool and the basic elements of it is make mistakes. Click, try a whole bunch of things, and don't worry, because you've got time to learn the basic elements of this tool. Before I go, don't forget, once you're happy with your charts and you really like it and you completed Unit 2, you then simply go and save it, and you can then go System and exit Market Delta Desktop. Alright guys, thanks for joining in for this Unit 2. Like I said, any questions, do utilize your live chat. Otherwise, good luck, and I will see you guys again in Unit 3. This how the footprint works. So what we're going to do in this session is we're going to bring it onto the blackboard, as we spoke obviously at the beginning of the course. When there's sort of these more complex principles to understand, we're going to bring them onto the blackboard, drill them down, really make sure that you understand every single little element, so that ultimately you can take those principles and develop them further yourself. So this entire session is going to be dedicated to how does the footprint actually work? What do these numbers mean, and what do the colors represent? Now, before we go into this, let's just really start with this little chart on the left here and go into the basic elements of it. I'm going to start on this line here that represents 206 times by the 719. Now, these two numbers, effectively, all they are is they are the buying and selling interaction that has occurred at this price point over a given rotation. Okay, so every one of these, as we can see in example number 2, every one of these is what we call a rotation. Now, with regards to what we can see inside this box, effectively on the left side, we can see that a seller has sold at this price, let's call it price 61, a seller has sold 206 contracts. Now, at the same price of 61, a buyer has bought 719 contracts. Now, I know you might be a little bit confused and say, well, how can they buy and sell the same price at the same time? Okay, effectively, don't worry too much about that. All you need to understand is that at this price point, let's say if we were trading between price point 60 to 62, over the price point 61, there was an interaction between the buyers where the sellers sold 201, but the buyers bought 719. Now, when this will start to make a lot more sense and become more relevant is when we start to put it into context, and that's how you'll begin to understand and interpret the footprint a lot better, is when we begin the process of developing context. Okay, so simply the X means nothing, it's just a divide line. And ultimately, if we were to work out what is the total volume transacted at this price 61, it's simply the 206 plus the 719, which will give us 925. Okay, so 925 contracts were traded at price 61. Now, if you're familiar with the market profile, that is what you would typically see at this price point if you created a market profile. Obviously, you could also see the same thing on the price ladder. Now, in terms of the next step or the next piece of information that we can take away from this, we would look at what we call the delta. Okay, now the delta is simply the net difference between the seller and buyer. Okay, so what do we mean by that? Well, again, let's go back to our example. So the difference in volume traded at price 61, the difference between how a buyer and seller interacted at this price, that is ultimately the delta. Now, what you can see here, if we just simply say 716 minus 719 minus the 206, that'll give us effectively 514. 513. Okay, so 513 would then be called the delta. Now the next step, or the next bit of statistic or information we'll take from that, is ultimately what that delta was representing. Was it the buyer that won that price, or was it the seller that won that price? In this example, obviously we can see that there was more buying interaction at this price than selling interaction. Therefore, we would get a positive delta from this price, and ultimately it would be a positive delta of 513. Now, where that's important is obviously as the footprint is developing over a course of a rotation or a given period, we then get something called a cumulative delta. And the cumulative delta is simply all of the deltas from this rotation, this rotation, this rotation, all of them accumulated together. Okay, now just for very basic sense, the cumulative delta is very closely watched by traders. Why? Well, because we can see ultimately who is winning the fight or who's winning the battle over a given number of prices. Also, the cumulative delta can sometimes very easily show you where the positioning is, and ultimately are the buyers positioned long in the market or are the sellers positioned short in the market. Again, we will begin the process of utilizing all of these various statistics, both volume, delta, as well as cumulative delta, as we begin the process of developing individual strategies. Okay, so that's the basic essence of what the footprint is showing us. So let's now move on and let's use this in a little bit of a hypothetical example. So what you've got here is 3 rotations. Now, before we go into the example, I just want to drill down some of the settings that we spoke about in the Unit 2 when you were setting it up, just so you can, again, we can revisit those settings and you can understand exactly what some of those settings are. Okay, so you would be familiar with this, you've seen this quite a bit, but ultimately you've got 2 very basic types of settings. The first is your rotations. Okay, so as mentioned previously, every one of those lines effectively represents a rotation. Now, you can choose to set this rotation either to bar, okay, so a typical bar time frame, and all a bar time frame is, you can think of it as, it's nothing other than a normal traditional candlestick type time frame. Okay, so with bar type rotations, you can set the time to 5 minutes, you can set it to 30 minutes, 60 minutes, daily, monthly, whatever you would like. You can effectively create a time-based rotation with the setting bar, as we can see in the example on the left. Now, the second type of rotation you get is what we call a point and figure. Okay, now all a point and figure is it simply allows you to create a rotation based on a certain number of prices. So what do we mean? Okay, let's say prices go up by 10 prices and we've got a point and figure with a setting of 10 prices. Now, what this means is that the market or the footprint will keep utilizing the same rotation until such a point that the price reverses at least 10 ticks in the opposite direction. Okay, only once it prints 10 prices in the opposite direction will you then begin the next rotation, rotation number 2. Okay, and obviously if prices keep going down in a straight line, we won't get the next rotation until we get 10 prices again in the opposite direction. Okay, and that's ultimately how we get rotations based on the point and figure. So those are, throughout this course, those are the 2 source types that we are going to utilize. We are only going to utilize these 2 source types. Why? Well, very simply, one, we can, I want to keep this simple, obviously, for you guys, but also 2, I don't want to give you too many I don't want to give you too many options, okay? Sometimes too many options is a bad thing because you're going to start to play around with it, and instead of, looking at your charts consistently every day, you're going to start to look for, sort of trade strategies, or let me rephrase, you're going to start playing with the settings, thinking that, it's your settings that are creating a lack of opportunity, instead of the way you're looking at the market. Okay, so I'm going to keep it very simple. We're only going to utilize the bar. Why? Because bar we can play with time, and then obviously the point and figure. Why? Because the point and figure is particularly good for looking at auctions. Okay, so those are the 2 types of rotations you are going to deal with throughout the footprint course. Now, the next setting I want you to focus on is ultimately the different styles of footprint you get. Okay, so very simply, we first spoke about the types of rotational settings you have. Okay, and they were number 1, a bar rotation, and number 2, a point and figure. Now we're going to talk about the style, and the style is just simply, what do you ultimately want to see? Okay, so the traditional one, the very first one you saw on page 1, which we'll come back to, is simply just the bid times the ask. Okay, and simply put, that just shows us the bid and ask at every single price, and it shows us a number at every single price. Okay, so that's the first type you can expect to see. Now, the second type you can expect to see is the delta. Now, as explained, the delta is nothing more than the difference between the volume traded by buyers and sellers. So again, in this example, we can see the delta between these 2 would be 50. Now, that delta can be represented as a positive or as a negative. Very simply, if there was more buying in at this price, as we can see, the delta would obviously be positive on the day. Vice versa, it would be negative. Okay, so when you select this option or this style of delta, it will not show you the 2 separate prices. It'll merely just show you plus 50. Okay, then the third type you can expect to see, I'm just going to erase this. The third type you can expect to see is the volume. Again, very simply, instead of having the traditional, let's say 100 by 50, you will simply just get the total, which is 150 contracts. Okay, so it just accumulates the total volume traded at that price and puts it in a footprint type of view. Then the fourth is a profile, which we will not use, but again, it's very simple. You will just see a whole number of profiles created at each rotation, and then the last is the imbalance, and this one we will utilize quite extensively. And again, now the imbalance is quite an interesting one. Don't get too worried about it right now. Obviously, we're going to develop strategies on it as well, so I will go over this in depth later on. But the imbalance, very simply, what it does is it utilizes a number of prices. So I'm going to give you a little basic example. Okay, let's say for intensive purposes we had 10 by 50, and we had 20 by 50, and then we had 50 by 50. Okay, now what an imbalance does is it shows you where there is a big imbalance between the buyers and the sellers. Now, it doesn't do it at prices or at one price, it does it between prices. Okay, so what it ultimately shows us is it will show us between price 60 and 61 is there an imbalance in a diagonal in a diagonal way? Is there an imbalance between these two prices? So all it's going to show us is as prices are moving up or prices moving down, is there a sudden shift in the way buyers are buying higher prices or sellers selling lower prices? Now, if there is an imbalance, it will highlight it in a specific color. Again, it will look very similar to the first one I showed you, the bid time mask, except you can ultimately set it in such a way that when there is a big imbalance or an imbalance that you think is relatively big, it will highlight it for you very nicely with some color. Okay, so that's all the style types of footprints we're going to utilize. What I would say, for this course, again, I'm going to exclusively focus on number one, first and foremost, the bid times the ask. Why? Because this includes both the delta, it includes the volume, it includes the profile, and it ultimately also includes the imbalances. So if you use just this one style, it will ultimately incorporate all the information that you can find in the other four styles. However, that being said, we will go over the imbalance. It's a very specific trade strategy. I will show you how to utilize it and how it can ultimately give you meaningful information. Okay, so those are the settings that we spoke about in Unit 2, and obviously, hopefully now that I've gone through with them, you're starting to get a little bit of a better idea of there's only so many types of settings you can utilize with this footprint tool. Now, the next thing is obviously talk about the colors. As you can see, if I go back again, I'm just going to show you what the colors mean, and if we just start this again. Okay, so if we look at these colors, again, what the colors are representing to us now is we've got different shades of color. Okay, so firstly, we obviously spoke about the delta and the volume being transacted. Now, the color represents nothing other than one, the amount of volume. Okay, so color represents the amount of volume, and the type of color, okay, represents who won that fight. So the type of color, let me write, the type of color is ultimately representing the delta. Okay, so again, to explain this, let's use a hypothetical example. And I'm going to take this price point here, 697 times by 386. Now, the first thing is, what is the delta from this price? We can see very clearly there was more selling at this price called 61 than there was buying. So we know from that that the delta will be negative. Now, whenever there's a negative delta at a price point, it will always be red. Vice versa, if we look at the next price, obviously there was more buying in this instance. Whenever there's positive delta at a price, it will always be blue. Okay, so very simply, if it's red, it means that there was a negative delta at that price point. If it was blue, it means there was a positive delta at that price point. Now, the next step is the degree of shades. Okay, and you can see in this example, there is three different types of shades. One is a light blue. Then we've got a medium blue, then we've got a dark blue. Obviously on the other side, we've got a dark red, a medium red, and a light red. Okay, so there's three different degrees or shades of red, as well as three shades of blue. Now, all the shades are representing is the total volume traded. So it's wonderful because it gives you a relative representation of how much volume has been traded at that price. Okay, so when there is a lot of volume being traded at a price, you'll see dark colors, either dark blue or dark red, as we can see in this example. So as you can see here, dark colors. Why? Because it's the highest amount of volume relative to all the other prices in this rotation. Okay, obviously when there's little volume being traded, as we can see at the top here, in that instance we tend to see lighter colors. Okay, so that's all it is. So let's just summarize that. So firstly, we have two shades. For positive, we will have blue colors, and for negative, we will have red colors. In terms of the shades, we can choose the number of shades. Obviously, the default setting is 6, in other words 3 for the buying and 3 for the selling. We get a light, a medium and a dark blue, and a light, a medium and a dark red, and those just simply show a high or low relative amount of volume traded. Okay guys, I hope that makes a little bit more sense. I'm just going to scroll back down. Obviously you can select more shades if you want more shades, but again, keep it simple. That is the purpose of this. Let's keep it as simple as possible. Alright guys, so that's the basic settings that you're going to utilize throughout this footprint course, and just most important to understand, if you do want, you can obviously come and play with your colors. You can select the colors that you want on the footprint, but what I would say is don't pay too much attention to the colors, don't pay too much attention to the defaults. Keep it as it is. Why? Because I'm going to show you a whole bunch of strategies and utilizing ultimately a simple footprint chart. Okay, I'm not going to complicate it because I want you guys to grasp and understand the footprint tool. Alright, last but not least, if there's any concept you're not sure about, okay, if you still don't understand, what the footprint is, what each rotation is, the different settings, okay, sometimes maybe you just need to go and read over a little bit more. So you can obviously go to the help function. It's wonderful. It will explain the delta, the bid and ask, and the volume in its own wording. What I would say is if you still don't understand, that's okay, that's cool. I promise you, as we start to develop the examples, as we start to obviously in Unit 3 develop all the various principles, it's going to all start to click, it's going to start to make sense. You're going to see the footprint in action, and that's going to suddenly light up the light bulb where you go, okay, I'm starting to understand what this footprint actually represents. Alright guys, good luck, and I'll catch you all again in Unit 3.